Skye Holland just sold 99% of all its units. What is the direction ahead for buyers like you? Let's talk about this today. This weekend, everyone is asking me,
Hey Marcus, how come Singaporeans so rich?
Then my answer to them is PAP law, Singapore Parents Assisted Program. But
jokes aside, right?
launches like Skye Holland and the previous launches, right, just proves us one thing that I always advocate over here is that Singaporeans are richer than you think and they love properties more than you think. And before you throw stones at me, right, I always want to say that only 20% of Singaporeans stay in private properties and the rest are 80%, and the rest of them are actually staying in a HDB flat. So when you say that averagely Singaporeans are not that rich, you are correct, because it's usually the top 20% of the buyers, right, who believe in properties and treat it as an investment will be the ones buying, and we don't really need every single person or the median income to reach that peak. But instead of posting a post-mortem, I want to talk about what this actually means for you, especially if you're a serious buyer who is trying to enter the market within the next few months. Because every time a project sells, people will say that,
Wow, another one gone already. Wow, then the next person will say that so expensive, actually doesn't matter lah.
or some will say that,
I should have put a check over there.
the saddest one will be,
Never mind lor, wait for the next one.
but if you constantly wait for the next one, means to say that you have to revisit your point of whether are you really serious about entering the market in the next few months. I want to disclaim that I'm not saying that you cannot wait to buy, but instead you need a clear direction of why you are waiting for, instead of waiting for a good ballot number, because time is also equivalent to money. Take for instance those who missed the launches at the beginning of this year 2025, right, had their exit strategy extended from 3 years to 4 years because of the new cooling measure being announced. Hence, you can wait, but you must have a direction. If you are someone that prefers direction over hype, hit the like button so that it will encourage me to do more of such videos, and consider subscribing to the channel because I post weekly real estate content like this to help you navigate this super hyped up market in a new launch. What this video is going to be done is, number one, I will do a quick run through of Skye Holland pricing and how it compares against the other CCR projects. Number two, I'll share with you what I've been observing on the ground during this launch period using real data, because I actually looked through the entire price list so that you can learn how to watch out for this trend by yourself. And last but not least, what you should be doing as a buyer in this current market. Do a quick summary on the pricing. Skye Holland averaged about 2,953 per square foot based on reports, and about 10% lower than the recent CCR launches like Upper House and River Green. Even the 4 and 5 bedders were actually kept around 3,001, to some of them crossing $3,200 per square foot for CCR. And as for the 2 and 3 bedder, pricing was very reasonable, with most of the units priced below $3,000 per square foot, other than those that are closer to the 40th story mark. And one of my clients secured a 2+ study below $2,800 per square foot for a mid-floor unit, and thankfully for a good queue number and a lucky Asian. Jokes being aside, my client went into the launch with a very clear-minded walk-away price that we actually decided together, because I always believe that even you got a queue number doesn't mean that you actually bought cheap. Sometimes maybe the unit has been overpriced right from the beginning and you just choose out of your own preference. So end of the day, I've seen people who are first in queue and end up their unit was actually the least performing unit within the entire development. Any resemblance is purely coincidental. Saying that buying a property during the launch isn't just about queue number and hype, it's really about having a clear mind when you're entering the launch, knowing exactly what is the one that you are looking out for. Know your thoughts on the pricing, whether it's high, low or reasonable. Would love to hear from you. And if you have been following my channel, right, you know I actually predicted this, because in my previous video, right, I did how much the developer market in 2025. I said that break even was 2.2 and 20% to 40% profit margin would place launch prices at $2,600 to $3,000 per square foot, and it launched right at the upper tier, 2,953, which clearly shows that during good markets, when sentiments are better, developers will take the opportunity to take 40% profit. And also land bids that were being concluded during the high interest rates environment in 2024 means to say that they could have launched at a lower price, but since it's a good market right now, they should be positioning at a fair value, but not too far from the current average PSF. So well done on developers, CapitaLand and UOL for a good foresight. Go watch this video after this one, because I explained the framework I use to estimate developer pricing so that you can plan your next purchase using facts and figures. Now, Now, let's talk about what's happening on the ground. Buyers are regaining confidence after a huge scare during the tariff period. A lot of people are still waiting, but like mentioned during the earlier part of the video, only 20% of Singaporeans are buying private properties. So these 20% of the people are still remaining confident, and the fear kind of like wore out already. So layouts are more efficient after the harmonization, and with interest rates, most importantly, starting to ease or have already eased to currently the lowest is about 1.3%. Many feel comfortable entering the market today because if you study the data, right, when interest rates are low, generally prices will go up and will go up quite fast. Developers are also pricing with higher margins right now, mostly with 30 to 40% profit margins, as they understand the psychology of the buyers and especially the Singapore economy. Plus, most of them have already have their land bank from 2024 depleted, and this confidence will translate into stronger bidding for future land in year 2026. Essentially, for the developers, they are setting the tone for the next cycle. And do you know why I have always want to say this? Because this reflects one thing that I always talk about: delayed gratification. Smart buyers today are positioning themselves right to exit for the next cycle instead of just waiting for the cheapest new launch or the best location to happen in 10 months time. To sum things up, right, all these signals to me that market is regaining its rhythm, and people who already bought a property should tap your shoulder and say, bro, good job, because you bought that unit. And this also reflects why I actually bought the Springleaf as well, instead of waiting for the RCR launches, which I obviously could afford to do so because it's a pure investment. So because I feel like all these points to maybe a potential cooling measure again in 2026, don't quote me for that. Another observation will be the land cost conversion between the CCR, RCR and OCR. Holland Plain and Dunyan Road are now at similar land cost, and obviously Holland Plain is so much further away from the MRT station, even though it is within 1 kilometer to Methodist Girls' School. Simlian actually bought it at a price that they have to sell at the same price as Dunyan Road. And before you think that's crazy, right, Chuan Grove and Bayshore are also bidded at about the similar kind of land cost, about $100 per square foot difference, which mimics the price of RCR today. And another thing is that ECs are also set to launch near or even trade above $2,000 per square foot, with CDL bidding Senja and Woodlands EC just a few months ago. And if you wish to find out more about the EC or the low-hanging fruit, there's actually this Coastal Cabana that is launching soon. I don't really do a lot of EC, but if you wish to get my advice on these two developments, feel free to reach out to me, because this is probably the last new launch for the year of 2025 before it ends. But what I'm trying to say over here, this is the entire map you can screenshot and read if you wish to. It means that the new wave of launches will launch higher across the board, and the current new launch you can get at $2,000 per square foot in a few months time will be cheaper than what you pay for an EC. So yeah, maybe the reason why I go and buy Springleaf is because I keep doing videos like this that reinforce. That's why you are watching these videos, right? Because it gives you confidence. And smash the like button if you agree with me. Thank you. Next will be the size of the units. Why are the 4 bidders and 5 bidders selling at higher PSF as compared to the 2 and 3 bidders, which kind of go against the fundamentals of bigger floor plate actually pay lower PSF? And the fundamentals are clear because if you look at Leiden Residences and also Leiden Green, which are about 1 over kilometers away from Skye Holland, the 4 bidders are actually trading at a higher PSF as compared to the 2 and 3 bidders, which some will think is illogical, but make sure you stay until the end because I will share with you what would be my strategy going forward. Another observation on the ground is that schools are not everything. Why? Because when I bought Springleaf, and you never buy Springleaf, obviously you are watching this, people will say that
Skye Holland no school lah, no top schools nearby, cannot buy because everybody buy for school.
if you have this concern, go and watch my Springleaf video because I explained that already in a very clear manner, so go and watch this. But the truth is that if you really want a school, just rent for 2 years. Why? Because it's cheaper and lesser equity risk as compared to buying a $2.5 million house with no guarantee that you can get in. Because if you do the calculation, I just paid my stamp duty for the $2.5 million property, right? Your stamp duty alone is already about $120,000. $120,000 if you divide by renting for 2 years. 1 year you can rent 60k, divide by 12 months, you can actually pay 5,000 rent every month until your kid gets in. Then you go and buy the property that is within 1 kilometer to the school. Isn't that a more financially prudent or logical way? And let's be real, end of the day, your kid might also maybe become an influencer, a YouTuber, or maybe property agent. I deliver it in a funny way, but actually isn't this a fact of life? Let me know what you think. Last trend that I want to show, because it's important, because it marks the end of this year already almost. And 2020, right, you can see that 2020 and 2021 were times when the interest rate actually dropped below 1%, and you saw that majority of the launches were cleared during that time. From year 2021 to 2022, right, the average pricing for the OCR jumped from 1,600 to 1,900 plus per square foot. The RCR jumped from 2,001 to $2,300 per square foot, and the CCR actually inched up a little bit from 2.7 to 2.8 PSF. Each preceding year, the new launch prices actually went up pretty fast and furious other than the OCR properties. Why? Because the CCR didn't really go up that much. The reason why was simple. After the strong launches in 2020 and 2021, developers were rushing in to actually bid for land because interest rates are low and their land bank diminished. Based on earlier on what we said, like, this is a time that the developers will start to bid higher for land. Story short, 2020 balance units were clear, developer replenished land, 2022 prices shoot up. Today, does it look identical? Low supply, high bids, low interest rate. Momentum is building up again. So if you remember how fast prices jumped back then, right, I seriously think that history is about to rhyme once again. Now coming to the last part, this is going to be a long one. What you should be doing as a serious buyer in the market today. If you have a 4-bidder, right, focus on identifying price gap. Why? Because there are units that are priced at a lower PSF within the project itself and also the region as well. Are there projects which the 4 bidders are priced below the 2 and 3 bidders? If you look at the trend we identified earlier on, the 4 bidders in the new launch today tend to have a higher price, and also in the resale market, they often trade at a higher PSF with a lower entry, higher exit point, because it has a bigger footprint, so which results to a bigger profit 4 years or 5 years later when you wish to exit for your next upgrade. The way, I'm not saying that you cannot try your luck lah. I mean, if you wish to participate in the upcoming launches, I won't say no to a sale, and you can decide for yourself. With this recommendation comes the debate of location versus size, and before I committed to buying a 4-bidder, I went to check Clavon 4-bidder versus Stirling 3-bidder, and also Treasure at Tampines versus the Sengkang Grand. Between size and location, if I can afford, I will take size anytime, because one thing for sure is that you cannot renovate space. If your unit is small, means it's smaller, and with a smaller unit, you tend to have higher push factor for you to want to sell because space is getting insufficient. The 4-bidders and Clavon, right, actually never lose to 3-bidders in Stirling despite not being near the MRT and being the OCR. And if you compare Treasure at Tampines, Riverfront versus Sengkang Grand, 3 of them launched at very similar seasons, but many choose to pay for the premium to be on top of the MRT and also the shopping mall. So end of the day, it's clear and obvious that Treasure and Riverfront made much more profit as compared to Sengkang Grand. Again, I need to disclaim over and over again, I'm not saying that you cannot buy location, but just remember, end of the day, it's always safer if you can identify price gap, and there's less push factor and resale competition when you're buying the bigger footprint. If you're looking for the price gap or a discount, right, there are some projects currently with 4-bidder PSF that's cheaper than typical units. If you wish to get my consult to see whether it suits your exit strategy and investment goals, here's my number. But if you are not contacting me because you already have an agent, I respect that also. To stick to my 3 golden principles, which is number 1, start saving and start investing as early as possible, because as we age, the amount of leverage decreases. Number 2, constantly upsize your asset net worth by upgrading to the next asset class as soon as possible, because you need to move up the ladder to grow your net worth in a safe and stable method. Last but not least, always allocate 18 to 24 months reserve funds to tide through difficult times, if not a 20% buffer of your available capital. And I want to add one more, which is to smash the like button and to subscribe, because if you watch the video until now, don't be selfish lah, just subscribe and like lah. Why? Because that means that you won't miss the next one. So thanks for watching. To all the people that have already bought their unit in the recent launches, congratulations, and those that have not got anything, right, good luck to your upcoming launches. Thanks for staying until the end. I'll see you next week. Bye.